Datavault AI Inc. is currently trading at 0.70 USD, showing a decline of 1.24% during today's session. While a drop of less than a penny might seem like noise in a market where Nvidia stock or Apple stock dominate the headlines with massive daily swings, this specific movement tells a much grimmer story of liquidity and investor sentiment in the microcap space. Most people looking at their individual brokerage accounts or checking their Robinhood app see a 70-cent stock and think it's a bargain or a lottery ticket waiting to be punched. The expectation here is simple. It's an AI company, and anything with AI in the name should eventually catch a tailwind from the broader tech sector. However, the reality is far more complex and involves a difficult look at how small-cap data firms actually survive when the giants of the industry are sucking all the oxygen out of the room. When you look at your SoFi Invest dashboard, you might see a sea of green for large-cap tech, but Datavault is fighting a different battle entirely. It's not just about the price, it's about the conviction behind the sell-off. We're seeing a slow bleed that suggests institutional interest is thinning out, leaving retail traders to pass the bag back and forth on platforms like Interactive Brokers. The common narrative surrounding Datavault AI Inc. is that it represents a ground floor opportunity in the data management sector. Investors often flock to investing sites looking for the next big thing, hoping to find a company that can do for data what Nvidia stock did for processing power. They expect that as more businesses shift toward automated intelligence, the infrastructure provided by companies like Datavault will become essential. But the reality we're seeing in the charts today is that the market is beginning to doubt the scalability of their specific model. Unlike the massive cash reserves you see with Apple stock, microcaps like DVLT operate on razor-thin margins and are often reliant on constant capital raises that dilute the very shareholders who believed in the mission. If you're using Schwab Intelligent Portfolios or similar automated tools, you likely won't find this stock in your mix because the volatility and risk profile are simply too high for a structured investment strategy. This disconnect between the hype of the AI label and the actual fiscal performance is where many traders get caught. The intraday volume, the activity on the Fidelity trading platform, shows that there's very little support at these levels. When a stock falls 1.24% on low volume, it indicates a lack of buyers rather than a massive wave of sellers. This is arguably more dangerous for the long-term health of the stock. In an online investment environment where everyone is looking for quick wins, a lack of interest can lead to a death by 1,000 cuts scenario. People holding shares in their Robinhood investments account might be waiting for a catalyst, but the macro environment is shifting. Higher interest rates have made the cost of capital expensive, and for a company that isn't yet profitable, every day the price stays under $1 is a day closer to potential delisting warnings or the need for a reverse split. This is the part of self-investing that the flashy ads for investing sites don't tell you about. It requires a level of scrutiny that goes beyond just reading a ticker symbol. The reality of Datavault AI Inc. is that it's a specialized player in a world of generalists. They focus on secure data storage and AI-integrated cloud solutions. On paper, this sounds like a winning formula. If you look at Fidelity mutual funds or various Fidelity ETFs, they're packed with companies that provide similar services but at a much larger scale. The expectation is that Datavault can carve out a niche that the big players overlook. The reality is that the big players have enough money to simply acquire the niche or build a competing service over a weekend. When you use your Interactive Brokers platform to scan for undervalued tech, you have to ask yourself why the market is pricing this at 70 cents while the rest of the sector is at all-time highs. Is it a hidden gem, or is it a company that is being outpaced by the sheer velocity of innovation at companies like Microsoft or Google? This is the central tension of online investing in 2026. I want to pause here for a second and get your take on this specific sector. Comment below how many shares of Datavault AI Inc. or other micro-cap AI stocks you currently hold in your portfolio. I'm curious to see if the community is leaning toward these high-risk plays or sticking with more established names like Nvidia stock or Apple stock during this period of market uncertainty. The institutional activity, or lack thereof, is another red flag. When we look at Fidelity Wealth Management or the holdings within a Fidelity brokerage account belonging to high-net-worth individuals, we rarely see significant positions in companies with this market cap. Professional money managers tend to avoid the penny stock stigma because of the liquidity risk. If a large fund tried to exit a position in DVLT today, they would crash the price by 20 or 30% just by trying to find enough buyers. This means that the price is largely driven by retail sentiment on the Robinhood app or SoFi trading platform. Retail sentiment is notoriously fickle. It can turn on a dime based on a single tweet or a rumor on a message board. This creates an environment of extreme speculation rather than sound investment help. For those who prefer a more hands-off approach, something like an intelligent portfolio or a robo-advisor would never suggest a heavy weight in a stock like this because the risk-adjusted returns just don't make sense. Datavault AI Inc. has tried to position itself as a provider of clean data for machine learning. The logic is that AI is only as good as the data you feed it. This is a solid business premise. However, the execution is where the reality falls short of the expectation. To provide that level of service, you need massive server infrastructure and a global footprint. Looking at their recent filings, the capital expenditures required to compete with the likes of Amazon Web Services or Google Cloud are staggering. While they're not trying to replace those giants, they are trying to live alongside them. For an individual brokerage account holder, the question is whether Datavault can reach profitability before they run out of cash. This is the burn rate problem. Many traders using Interactive Brokers stock trading tools are watching the cash-to-debt ratio closely. If the company has to go back to the well for more online investing capital, the existing shares will likely lose more value. This is the part of self-investing that the flashy ads for investing sites don't tell you about. It requires a level of scrutiny that goes beyond just reading a ticker symbol. Comparing this to the way people approach Robinhood crypto or Robinhood fractional shares, there's a clear trend of gamification in these lower-priced stocks. People buy 1,000 shares of a 70-cent stock because it feels like a bigger win than buying a fraction of a share of NVIDIA stock. But the math of the investment doesn't care about the number of shares you own, it cares about the percentage move. A 1.24% drop is a 1.24% loss whether you own one share or a million. The psychology of the price point often blinds people to the underlying fundamentals. If you were to look at this through the lens of SoFi active investing, you would see that the technicals are currently bearish. The stock is trading below its 50-day and 200-day moving averages, which is usually a signal for institutional algorithms to stay away. When you look at Fidelity IRAs or long-term retirement accounts, you want stability and growth. Datavault currently offers neither. It offers a high-stakes gamble on a specific technology being adopted faster than the market expects. The expectation is that a partnership or a big contract will be announced any day now, sending the stock back towards its previous highs. The reality is that these contracts are incredibly difficult to secure when you're a small company competing against the reliability and brand name of a tech titan. Why would a Fortune 500 company trust their data to Datavault when they can just add a module to their existing Apple stock ecosystem or Microsoft Azure subscription? This is the moat problem. Datavault has a very small moat, and it is being crossed by giants with very long legs. The recent movement today, that 1.24% dip, might seem minor, but it's part of a broader trend of consolidation that isn't resolving to the upside. In a healthy market, you would see a stock like this bounce off the 70-cent support level with some volume. Instead, we're seeing it drift. This drift is often a sign of exhaustion. Even the most loyal bulls on the Robinhood Investments platform are starting to wonder if their capital could be better utilized elsewhere, perhaps in SoFi ETFs that offer exposure to the broader AI sector without the single stock risk. This is where the concept of opportunity cost comes in. Every dollar you have sitting in DVLT is a dollar that isn't in a high-yield savings account or a more stable investment like Fidelity Investments index funds. To understand where Datavault is going, we have to look at its history of reports. In previous quarters, the company has emphasized its technological superiority and its patent portfolio. While patents are valuable, they are only as good as your ability to defend them in court or monetize them through licensing. For a small player, legal battles are an expensive drain on resources. The reality of the tech world is that the companies with the most money usually win the patent wars. This brings us back to the expectation versus reality framing. The expectation is that the tech wins. The reality is that the balance sheet wins. If you're doing your own investment help and research, you have to look past the pitch deck and look at the actual revenue growth. Is the revenue growing faster than the expenses? For Datavault, that answer has been a tentative maybe at best. In the final analysis, Datavault AI Inc. represents the classic struggle of the microcap tech stock. It has a compelling story, a relevant name, and a price point that attracts retail interest on platforms like the Fidelity mobile app or Robinhood app. But it lacks the institutional backing and the massive scale required to dominate its field. The current price of $0.70 reflects a market that is waiting to be impressed, but is currently being let down by the lack of clear, profitable direction. The expectation of a quick AI